Well, hi. Let's talk about Tesla. Now, this has been quite a wild ride. We've dropped an enormous amount this year on Tesla, and I think it's around about 75% this year. And the question is, where do we start looking for a bottom? I've got the Tesla day chart on here, and you can see that we've dropped, from the beginning of 2022. Let's have a look at how much it is. So from up there down to where we are at the moment. So that's 74%-ish to the low from the top to the bottom. So it's a hell of a drop. And the question is, where is this going to stop? Now, here's a pretty simple way of doing it. This is the daily chart. If we switch to a weekly chart, we get a little bit of a better idea. And there you can see the weekly chart. And I've drawn on here the Fibonacci retracement level from the low in 2015, 2016, up until the high at the end of last year. And you can see on this logarithmic scale, we've come down to almost 78.6% retracement level. Now, if I change the scale to a regular scale, it looks pretty different. So there's where the bottom of that fib's drawn from. There's the high, and you can see on a regular scale, it's pretty difficult to read, and it looks much more catastrophic than it is, and it makes the whole process of picking levels rather difficult and rather scary. And we've fallen off a precipice since the beginning of this, it's last year now, 2022. But if we go to a logarithmic scale, it makes a lot more sense. So that's the first step. Switch to a longer time frame, switch to a log scale, particularly with stocks, because in general, as time goes on, stock markets tend to rise with the increases in the stock market price and inflation, and so the value begins to escalate, and we need to put a log scale in so we can compress the scale in the earlier parts of the range and place more emphasis on the latter parts of the range. So this is a weekly chart. You can see we've broken through all the moving averages. We've got the 20 MA, this green one, crossing down through the 50, the red one, crossing down through the 100, the gray one, and the price, not the 20 moving average, but the price itself has broken through by quite a long way the 200 week moving average. And we've also broken through all these retracement levels, 38%, 50%, 61.8%. We're heading down towards the 78.6%. Now, the 786 Fibonacci, one of my very favorites, a powerful level. It's often the last sort of outpost, the last place of defense for any instrument that you might be trading. And quite often, it acts as a price magnet. First of all, the price is attracted to it, but it also acts as a reversal point if this trend upwards is going to continue. Now, when it comes to Tesla and electric vehicles, there's no reason to expect that we're going to get any dramatic collapse over a long period of time, and that the uptrend should continue over time. And that's looking at all the fundamentals of electric vehicle companies, Tesla in this case, and also looking at the general kind of emphasis and flow towards electric vehicles, legislation on electric vehicles that are beginning to take effect all around the world, making them mandatory in 5 years' time, really, in some countries. So EVs are here to stay, at least for the short term, until we can figure out how to deal with the battery waste produced by these vehicles. But for now, it looks like they're in for the long term, or at least the medium long term. And therefore, we'd expect the 78.6% Fibonacci to hold. We expect that, or perhaps just a little test through that. So that level is at 96.3. I'm going to change this to the monthly chart because it gives an even better view and gives us a little bit more of a clue of the level. So there's the monthly chart on Tesla, and we see the same level there, 96.3, the 78.6% fib. But also, perhaps pretty interestingly, just below there is the 100-month simple moving average. That's this one here. And you can see that level there, where it is today, and it's probably not going to change much in the next few months. It's starting to flatten out. If anything, it's going to go sideways, that 100 period SMA on the monthly chart. So it's probably going to stay around about the current level. That's 87.438. Let's call it 87.4. I expect Tesla to start forming a base between 96.3 and 87.4. Those would be great levels to start to look to buy Tesla. Look for reversals if you're a swing trader. Great place for at least temporary bottoms. If you're a long-term trader, that would be the area. to start to price average, cost average into Tesla for your long-term portfolio. So we've got the levels, pretty simple, we just got to wait. And if you're trading, swing trading at the moment, I would sell rallies up, bounces perhaps up to 100. I don't know, it's very difficult. You know, bear market rallies can be quite severe, quite dramatic, quite rapid, and we could get a 20-30% rally before this one carries on down. But overall, 96.3 and 87.4, great levels to be looking to buy Tesla for swing traders and for those with Tesla or hoping to put Tesla into their portfolios. Hope you enjoyed that. Take care. If you like this content, please like, subscribe, press the notification bell for more videos like this. Don't normally do stocks, but this is a great one. Take care.